Arvind Sanger is ready. And can we go to him? Yes, we can. Good morning, sir. How are you doing? Do you agree with our analysis? You have the right to dismiss it completely also.
No, I always find the preoccupation with the budget kind of a vestige of a previous era. Most of the budgets have been incremental, so I don't see anything dramatic, but I think the government needs to do something a little more bold, given how much the economy is struggling. So I think the question is, are they prepared to do something bold to maybe shake up your and my and the consensus expectation that it's going to be, largely a lot of talk, but not anything significant that will move the needle.
We are staring at a market, Arvind, where small and mid-cap stocks, at least in India, they're actually getting smoked. Everyone is feeling the pain of the decline. The average decline in portfolio, if I say, is 10%, then you would say you're outperforming the market. But I look at Nifty is down only 2% in the month of Jan. Is the market changing? Has the tide turned in favor of large caps?
Well, large caps had not run up as much, so they haven't suffered as much. And for us, foreign investors, the dollar has also strengthened against the rupee, so it's a little bit worse than 2%. But the reality is that, yes, that's the place to hide out, because those companies, I mean, look at Reliance, how much is it going to go down? It's already, close to 52-week or at least multi-month lows. You look at some of these other stocks, they're not the place where the pain is. I mean, it was these ridiculous IPOs getting, second tier, third tier companies getting 70, 100 times oversubscribed and then popping 50, 70% on the first day. You're seeing the air come out of that bubble. I think that's very healthy, actually. If you ask me, the market had forgotten risk adjustment. And I think people, forgot that, markets are not a one-way street. And retail investors were all convinced that India is the only game in town and can only go up. And now I think you're getting some reality check. And for the long-term health of markets, a little bit of bloodletting and bringing rationality back, I think is always healthier for a long term.
Absolutely, and that's what we're waiting for, Arvind, the bloodletting to get done with and some rationality to set in. But do you think we've fallen enough? I mean, from the top, we're down already 12% on the Nifty alone, and I'm not even touching the mid and small caps. How much more pain before we actually see some genuine buying kick in? And more importantly, what's going to trigger that?
I'll answer your second question first, and I'll come to the first one later. I think what we need to see is some sign of recovery in the domestic economic fundamentals. We need to see consumer demand stabilizing and starting to improve. We need to see business confidence recovering in terms of business capex, business confidence, whatever measures one looks at. And just having stock market confidence has not translated into the real economy, right? There is the reflexivity argument that stock market, certainly in the US, has been a very powerful reflexive feedback into the real economy. In India, it has unfortunately not worked at all. If you look at, the September quarter numbers or the December quarter numbers, the stock market was booming, and yet the real economy was not. So I think we need to see some signs. And I'm not sure what's going to cause that, but I think it can't just come, the government is going to open the floodgates and start spending money on infrastructure again. I think we need to see more meaningful consumer and private sector led recovery in economy, and along with maybe the government doing more spending. But I think we need to see something there, and maybe the budget can help kickstart that by putting some solid incentives on the table to try to get the businesses, and consumers back in the game.
Interesting. And I'm also wondering, Arvind, whether the texture of the gainers or the rebounders, so to speak, can change this time around. Do you bet on the same horses, or do you think there are going to be newer ones which are going to take us out of this limbo?
I think, look, the quality mid-caps which have sold off will continue to work. I'm not a big fan of, let's say, the IT sector, but that's been one of the places to hide. And people have been hiding there. So that's not necessarily going to be the one that's going to lead us out. Could it be some of the higher quality financials? Yes, it could be. but could it be other parts of the economy, some of the consumption plays that have suffered, some of the capex cycle companies, some of them have gotten to interesting levels, special situations. I think the ones where the earnings, is the power demand going to come back? Some of the power stocks have sold off a lot. Some of these areas, it'll depend on where we see the recovery, what is leading it, how it's coming back. And some of the low quality small caps, I certainly think it'll take a while before the bulls start throwing money into highly speculative, lower quality names. So I think it will be high quality mid caps across different industries.
Okay. So where are you shopping, Arvind, in this market? Where do you think right now it's time to put that 10%, 15% additional capital to work?
We've been starting to buy. I mean, we're looking at companies across a few sectors in India. We're looking at one or two of the banks right now that are still showing signs that things are maybe tapped out in terms of the downslide. We're looking at other special situations related to electronics, consumer, some of these areas. But again, we have a basket, we have limits. And if something falls into that limit within the basket of names you're looking at, those would be the places where we'd put money to work. I know you were talking a couple of minutes ago about US tariffs on Canada and Mexico. I'll tell you one place where we put money to work this afternoon, US time. I bought a Canadian oil company, and I bought, and just this is a aside to our India discussion, and I bought a Canadian uranium miner. My bet is that all that tariff talk is not going to be a headwind for either the Canadian market or for global markets. So I think worrying about the global setup, I think the thing I would worry about, yes, Trump is unpredictable. Yes, he makes a lot of noise. But I think the main thing to worry about FIIs coming to India is that US businessmen are feeling, as long as Trump doesn't do anything dramatically bad on tariffs, are feeling much more confidence about the US economic outlook, with the tax probably cuts, or at least not going up, with all kinds of regulations coming down. I would say another advice for the government, it may not be in the budget, but this government has not taken the steps we would hope to aggressively deregulate. And if I were to give one advice to the government, I don't know if it comes in the budget or it comes elsewhere, but some idea on privatization, deregulation, do something to show a change in tone in terms of lesser government. And I think those are the kind of things that are attracting us in the US, and those are the kind of things that could jumpstart confidence in the Indian market.
Okay. All right, Arvind, really appreciate your time. Thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.